Daily Fiscal Pulse for the 29th of April, 2026. We're looking at Wednesday's session here. Keep in mind these numbers are finalized, not in real time, as we walk through the day. Let's start with what's capturing market attention right now. There's no clear dominant narrative steering things, but Apple's earnings and revenue beat, especially strength from their services business, is what's driving the conversation and influencing how prices are moving. These narratives can shift quickly though. What the flows are telling us tends to be more reliable. Turning to the fiscal side, the net transfer landed at $1.3 billion, with tax receipts doing the heavy lifting at $21.0 billion. At first glance, nothing stands out as unusual. The ES picture is actually looking more optimistic than the flows would suggest on their own. ES futures wrapped the day at 7,170, maintaining a position above the 20-day moving average which sits at 6,981. That 20-day range is roughly 697 points wide. Despite fiscal headwinds, the price action is holding steady. Zoom out and you see the acceleration in flows pretty clearly. Government spending over the last 5 days is averaging around $8.0 billion daily. That's notably different from the 20-day average of $19.1 billion. More cash is flowing into households and then into the broader markets. The year-over-year picture confirms it. Fiscal year-to-date spending totals $684.3 billion, representing roughly an 18% decline from the same stretch last year. That's a substantial pullback in fiscal support, and it absolutely affects system liquidity. From a tactical positioning angle, the fiscal backdrop isn't offering much of an advantage at either end right now. Our conditions gauge is sitting at -16, but history is instructive here. We've encountered setups like this many times, and the data shows the S&P has still managed to average around plus 1.2% over the following month, even with thinner liquidity conditions. Markets don't always move in lockstep with liquidity flows, they can still grind upward regardless. Here's where the risk-reward gets interesting. With fiscal flows tracking below year-ago levels, there's less of a cushion to rely on. When the news cycle turns constructive, markets find a way to climb higher. But the moment a risk event emerges, like a shift in the no clear dominant narrative, the downside can accelerate more sharply because there's less liquidity underneath absorbing the selling. Looking ahead at potential catalysts, the 30th of April features the month-end settlement window, which can reshuffle short-term flow dynamics. And the 15th of April individual income tax deadline represents the single biggest reserve drain of the entire year. Fiscal conditions remain restrictive, though it's really the magnitude of that restriction that shapes what happens next. Track the scheduled flow calendar for your next signal. That's what we're watching heading into tomorrow.